Welcome back to the Till. In today's video, we're going to discuss the area median income for Northern Virginia. If you're in Fairfax, Prince William, Loudoun County, Prince William, DC, Prince George's, Montgomery County, essentially we're in a high cost area, but they just recently changed the AMI limits. And I had a client ask me whether or not these limits were relevant to our area and whether or not someone could actually buy a home within those numbers. So let's kind of talk about it. The area median incomes for Fairfax County, if you're at 50% of the area median income, it'd be essentially $82,050. If you're at those levels and below and buying a home, typically you might be able to get some seller credits. 80% is typically the you're eligible for HomeReady, Home Possible. You do 3% down, reduced MI, loan level price adjustments are capped. This is your main conventional low money down home buying product if you're not going FHA. FHA you would normally use potentially if you had lower credit scores, but this is your A paper conventional. Then if you're not in a high cost area, the area median income in this area would be 164, 100, and then high cost 196, 920. So just to kind of overview that, if in fact you have not purchased a home in the last 3 years, had no ownership, if you're under these limits, you would get some type of break if you were putting less than 20% down, being a first-time home buyer. It would either caps the cost, lowers the interest rate accordingly. So we look at, in general, we need to try to figure out whether or not these area median incomes, what I can buy within these realms. Can I buy under HomeReady, or do I need to make more money than the 131? So what I wanted to do was I'm going to, if you're new to my channel, I've been a mortgage broker for 30 years. I own First Meridian Mortgage. I've been a realtor with Jobin Realty for 20 plus, and I'm also a licensed insurance agent, and I own KSA Insurance Agency. We're a boutique insurance agency. We mainly use travelers for most of our insureds. If you're new to the channel, though, please like, share, and subscribe. That's how I can grow this channel. And that's one of the objectives that I'm trying to do, to educate when I do these videos. So what are the statistics? And since I have access to the latest statistics using Bright, these are last month's real estate statistics. And a couple things I found interesting here: the average list price, 1,068,000, was 17,000 higher than a year ago, but the median list price actually decreased by 44,000 versus a year ago. Last month, there were 2,567 homes sold. So the average sold price was $86,080, and then the median sold price was $750,000. That's the number that I was looking for. Try to figure out where that median number is, and see, one, what the closing cost would be, two, the income needed to actually be able to buy, and whether or not that worked with the area median income that we're currently at. So we need to know what interest rate we potentially would be looking at. So what I did there was $750,000 purchase price, 10% down, also pulling the FHA and VA numbers, and we're going to get a quote on what interest rate we would be looking at in today's market. Today is June 25th on these rates. So essentially 6 3/8 on a 30-year fixed. You can see this FTHB adjustment cap. You're saving $1,600 and some dollars being a first-time home buyer if you're under those income limits. FHA and VA are essentially um, 5.625 as a range. You would be able to get a credit to be at that level at 0 points, and same for VA would be 5.625. There's a credit allowed for this 10 basis points to actually be removed. So 5.625 on that. So let's look at those as a whole. So I have these plugged in: 6.375, 5.625, 5.625. So if we quickly looked at, and I'm going to run through one scenario with you, I'm going to do the conventional, and I'm just going to go through and walk you through normal closing cost on a 10% down deal so that we have a good basis of closing cost versus escrows. Okay, so closing costs are one-time transactional fees that you don't get back when you purchase a home. Admin fee or underwriting fee, everyone typically has one. If they don't, and the lender says we have no fees in box A, then in general, those you're probably getting a higher interest rate. So anyone can waive that underwriting fee, but it typically raises the cost also. Appraisal fee, self-explanatory. Credit report, self-explanatory. Tax and flood services that monitor the tax bill and monitor if the house is in a flood zone. Work number is only needed if your employer subscribes to a service that actually charges for us to get your employment information. Next four items are using Republic Titles fees. If you're buying a house in Northern Virginia, I would use them or Potomac. Both are good when it comes to fees. $5.95 settlement fee. Lender's title insurance, 1990. This protects the lender that they're in a first lien position. It does not protect you, so you want to buy your insurance later here. Insured closing letter protects all the money in the transaction, and $25 to record the deed at the courthouse. Thanks to COVID, that no one drives the courthouse. They actually do it electronically. Deed and mortgage recordation are per page. $75 is an estimate. It might be a little bit cheaper. City and county tax in Virginia, city or county is 83 cents and 30.34, and $2.50 at the state level. Here's where that owner's title insurance policy comes into play, 1853. It's optional. I would absolutely do it. Protects your money. Past home radon survey are all inspections. If you don't do them, they come off. Out in Loudoun, you might have well and septic in some areas. So transactional costs that you do not get back. These are closing costs are $13,128. If you divide that by that 750, you're at about 1.5% to 2% range, and in general, that's the closing cost. You're not really getting around any of those. None of those are coming to me. There's no points on this loan coming to me. This bottom section are considered like a bank account, right? It's your taxes, your insurance, your interest. So to get you on cycle with a lender, the only time you ever prepay interest on a mortgage is when you close. So this is done as if you closed on the 22nd of the month and you pay 8 days to get to the first. Then that first of the month payment's technically been made. You get to live in that property 30 days. When you make your first payment, you're really paying the previous month's days of interest. So when you pay June, you're actually paying May's interest. 1 year 1 year paid upfront insurance policy. You pay 1 year in advance. Homeowners policies are in a year increment annually. And then a year from then, they'll have money in that escrow. You pay 1/12 of your payment into that escrow for your taxes insurance, and then they pay that for you. Same for the tax bill. So you start that up with 3 months on the insurance, and 4 months on the taxes, and they may or may not collect 2 months on mortgage insurance on this particular loan. So both of these added together come up to that 18,890. So that's just under 3%. So about 2.5 to 3% for escrows and all the closing costs. Okay, so in general, 10% down be 75 grand. So you would need 93,890 to purchase this home with 10% down in cash. The payment here would be 5270. Breakdown is principal and interest is 4211 on the payment for the principal and interest, 175 for insurance, 675 for taxes, MI 84, and HOA. If you don't have an HOA, that comes off also. So, in general, that walks you through how much cash you would need for 10% down. Now, it is less if you do VA or FHA. And I'll give you a quick look at that when it comes to comparing these. So right here, if you're doing 5.625 on the VA and FHA, you can see that the payments are just slightly above. You got 5270 versus 5385 and 5543, but you're financing a lot more. So if you put the same 10% down, the payments on the VA and the FHA would be substantially lower. And I can potentially quickly show you that also. So if you did 675 on both of those, so if you actually paid the same amount on those, give you a little bit of a synopsis here. So if you put the same 10% down, your payment on the VA loan would be $300 and some dollars cheaper, and it would be essentially $63 cheaper on the FHA. But in general, if you had that 10% down, odds are you're probably not going FHA. So back to the conventional. If you had no debt whatsoever and your payment was the 5270, you would need 10,754 in income per month to qualify. So let's look at what that actually represents. So if you were looking at 10,758 times 12, you would need $129,096 if you had no debt to actually qualify. So if we go back and we're looking at that area median income, HomeReady's at 131,280. So in theory, those numbers, that 80% line, is lining up with where the area median income prices are for the three main counties here in Northern Virginia. I did not include Arlington, which I could have, but that probably would have raised those numbers pretty substantially in those if we added that one. So in closing, what I'd like to say is, when it comes to buying a home, right, and you're wondering how to get started, the best thing that I would tell you to do is to call a lender, get pre-qualified. You don't necessarily have to go to the extreme of having your credit pulled if you know you have good credit. Find out approximately what you qualify for, right? Then I would call up a realtor and I would say, give me all the homes within this price range in the areas that you potentially want to that you might want to live in, right? And just peruse through some of those homes and see whether it matches your taste. I always like to refer to buying a home on a beer, with a beer budget with champagne taste, or vice versa, right? So, what ideally you want to do is have an idea of what you can afford and what that represents in today's market. That's my best advice, so that one, you're not buying something and you're house poor. If you want to buy something a little higher end than what your budget allows, then maybe you save a little bit more, or maybe you move a little further out so you get the same house within the same budget time frame and or cost. Okay, my name is Kevin Retcher, owner of First Meridian Mortgage. If you would like to have an analysis done on what I feel you can and should afford, and then we can easily draw a map and say these are the homes that are within that budget, and you can take your time, check it out, peruse them, and see if moving forward is something that you want to do, if home ownership is right for you at this point in time. My name is Kevin Retcher, owner of First Meridian Mortgage, KSA Insurance Agency, licensed agent with Jobin Realty. I'm here to help and answer your questions to all your housing needs. Talk to you soon.